Hello and welcome to the Ontario Mortgage and Real Estate Insights podcast. I am your host, Steve Hamoen. In this podcast, we cover the daily developments, trends, and regulatory changes affecting the real estate industry. Our goal is to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. Whether you are a buyer, seller, investor, or simply curious about the market, we have got you covered. Today's episode is packed with crucial updates and insights. We will be discussing the recent developments in the Canadian real estate market, including the Bank of Canada's first interest rate cut in more than 4 years, rapid rebuilding of Canadian real estate inventory, significant losses in Ontario's condo market, RE/MAX Crown's expansion, and a new research project aimed at creating culturally appropriate housing for Indigenous groups. Let us start with the major headline. The real estate industry is looking for a boost from the first Canadian interest rate cut in over 4 years. Canadian real estate professionals are expecting their industry to get a significant uplift after the country's central bank cut its overnight lending rate. This is the first time in more than 4 years that such a move has been made. The commercial property industry has been facing a slowdown driven by a 22-year high in the Bank of Canada's rate. Now, with the cut made on Wednesday, the policy rate stands at 4.75%, and the country's other banks are expected to lower their prime lending rate in the coming days. This move is drawing attention from other countries where central bank decisions are pending on whether to lower interest rates. Real estate professionals are hopeful that further interest rate reductions could follow, which would reduce borrowing costs for developers, owners, and buyers. Bank of Canada. Governor Steve Hamoen was cautious during a press conference on Wednesday about tempering the reaction of property professionals and others regarding more rate cuts, but he acknowledged their likelihood. He also said he is aware that higher short-term rates aimed at curbing inflation have made things more difficult for buyers and renters. "We have come a long way in fighting inflation," Hamoen stated. The decision should make it easier for real estate investors looking to buy. Luc Simerda, Director of Research in Canada for commercial property brokerage Marcus and Millichap, commented, "The Bank of Canada indicated that it believes inflation will continue to trend down, suggesting further cuts will likely materialize over the remainder of the year. These factors will benefit not only consumers, but commercial real estate investors who are awaiting positive signs regarding the cost of debt." Simerda also added, "A 25 basis point cut in the overnight rate may not cause a wave of investment activity right away, given the fact that most commercial mortgages are priced off longer-term bond yields, which have largely been stabilizing around their expected values. However, it does signal to the market that borrowing costs are coming down, providing some renewed confidence for many commercial real estate investors." The head of one of Canada's largest residential brokerages also agreed that the interest rate cut is a welcome sign for those considering getting back in the market. "Our research indicates that half of the sidelined homebuyers in Canada plan to resume their home search plans once the bank rate begins to drop," said Phil Soper, President and Chief Executive Officer of Royal LePage, in an emailed statement to CoStar News. "This will no doubt spark activity and put upward pressure on home prices in the second half of the year." Housing analysts at the Conference Board of Canada said that the lower rates will help the real estate industry, though housing affordability will probably remain challenging. Given the high cost of shelter, housing affordability has been at the top of mind for many Canadians. In addition to rentals, recent data from Statistics Canada showed a 25.4% increase in mortgage interest costs in March compared to a year earlier. Average home purchase prices have also remained high despite some pullback in 2023. As interest rates fall and new measures to address affordability are introduced, housing supply will pick up, but only modestly. "In our view, the path to better affordability is still quite rocky," said the Ottawa-based group. Interestingly, policy rate cuts are not expected to reignite Canadian home prices significantly this time around. Even if the Bank of Canada continues to lower rates forcefully, the new reduction is unlikely to spark a surge in home buying and borrowing activity. Hamoen's comments came as Canada's largest real estate board reported that existing home sales continue to be slowed by the overnight lending rate, which is directly tied to variable rate mortgages. The Toronto Regional Real Estate Board reported on Wednesday that existing home sales in May were down 21.7% from a year ago, while listings had climbed 21.1% during the same period. The average selling price was down 2.5% to $1,495 Canadian dollars during that time. Jennifer Pierce, president of the board, commented, "As borrowing costs decrease over the next 18 months, more buyers are expected to enter the market, including many first-time buyers. This will open up much-needed space in a relatively tight rental market." Vacancy rates for apartments hit an all-time low in 2023, while rental rates are close to an all-time high. Looking ahead, the Bank of Canada is scheduled to make its next decision on interest rates on July 24th. "I know this is welcome news to many Canadians, and I also know everybody wants to know where are we headed," said Macklem. "Let's just enjoy the moment for a bit. We are taking our interest decisions one meeting at a time." At the recent Land and Development Conference in Toronto, panelists said interest rates were heavily affecting construction and leading to declines in presales of condominiums. Construction financing tends to be priced around shorter-term yields, such as the 1- and 3-year bond, which are more heavily influenced by the overnight rate, said Marcus and Millichap's Simerda. He added that, with the policy rate likely to fall further over the remainder of the year and into 2025, both land sales and development could see the largest uptick in activity as falling interest rates will allow more projects to pencil out. The central bank hiked its overnight lending rate 10 times starting in March 2022, after it stood at a record low of 0.25% in March 2020 after its last previous cut. Macklem noted those historic lows of years past and cautioned that any subsequent cuts will not take rates that low. "Do not plan on interest rates getting back to pre-COVID levels," he said. Canadian real estate inventory is rebuilding very rapidly, according to a recent report by RBC. The country's largest real estate markets have seen sales plummet, which is helping to replenish inventories. RBC has warned that existing home inventories in major markets are rapidly increasing. In a note to investors, the bank explained that a surge in new home completions and the start of the monetary easing cycle is motivating sellers. However, the same cannot be said for buyers, who are stepping back from the market, contributing to a price slowdown. Major markets such as Toronto, Vancouver, Montreal, Calgary, and Fraser Valley are seeing home sales weaken much faster than inventories. Home sales fell more than new listings in these cities, which has generally been the trend over the past year. This trend is helping to ease pressure on these markets. RBC economist Rachel Battaglia, who authored the report, explained, "We suspect many sellers are timing their move ahead of interest rate cuts with expectations of a rebound in demand." Battaglia added, "A rise in new condo completions in the Toronto area and struggling homeowners, including investors, are likely compelling more property owners to sell as well." New inventory remains resilient, but as the data shows, this is a story of lackluster demand. The start of the monetary easing cycle has motivated more sellers, but buyers are taking a step back, likely waiting to see how the situation evolves. Battaglia noted, "We think most buyers will wait for steeper rate cuts before jumping into the market as the lagged impact of high interest rates keeps budgets under pressure." Less inventory pressure means less motivation for prices to rise, and that is what is happening. June's annual price growth showed contractions in Fraser Valley at -3.2% and Toronto at -4.6%. Low growth is also observed in Montreal at 0% and Vancouver at 0.5%. The only exceptions are markets in Alberta, with gains observed in both Calgary at 8.5% and Edmonton at 7.0%. The influx of supply has shifted more of the bargaining power to buyers, who in some markets are still extracting price concessions from sellers. Battaglia further explained, "We suspect many sellers are timing their move ahead of interest rate cuts, with expectations of a rebound in demand." With home sales activity slowing down in most major Ontario housing markets throughout the spring, prospective buyers benefited from more wiggle room when negotiating lower prices. As a result, more and more homes have sold well below their listing prices over the past few months, including this 2-bedroom, 2-bathroom condo in Burlington's Tansley neighborhood. According to its listing, the 1,000 square foot condo boasts a spa-like 4-piece primary ensuite with double sinks, a gas fireplace, and upgraded flooring. The unit was first sold in February for $865,000, at a time when cheaper borrowing rates contributed to heightened demand throughout the province's real estate market and, in turn, drove home prices up. The condo was put back on the market in May 2024 at a significant price reduction of $679,000, but this listing was terminated a short while later. Finally, the unit sold for $645,000 this week, representing a $220,000 loss when compared to its selling price just 2 years earlier. Other cases in recent weeks include a 3-bedroom apartment unit under condo ownership in Brampton that sold at a devastating $238,000 loss after 9 failed attempts to sell. More examples include a 1-bedroom, 1-bathroom unit in Oakville's Glen Abbey neighborhood that was sold at a significant loss of $237,000, and a Toronto condo that was sold at a $305,000 loss when compared to its price just 2 years earlier. According to the Canadian Real Estate Association's latest report, May continued to be a relatively uneventful month for many housing markets throughout Canada, as the national month-over-month home sales edged slightly lower. Sean Cathcart, the Canadian Real Estate Association's senior economist, stated, "May was another sleepy month for housing activity in Canada, although it may prove to be the last of those now that interest rates have moved lower." Home sales activity recorded over Canadian multiple listing service systems dipped 0.6% between April and May 2024, remaining slightly below the average of the last 10 years. RE/MAX Crown, the market leader in Northern Ontario real estate, is excited to announce its expansion into North Bay, Callander, Restoule, and the surrounding cottage country. With this strategic growth, RE/MAX Crown has positioned itself to extend its exceptional services and expertise to these vibrant and dynamic communities. RE/MAX Crown has been a force in the Northern Ontario real estate market for 35 years. With offices in Sudbury, Hanmer, Espanola, Knollville, and now North Bay, Callander, and Cottage Country, RE/MAX Crown continues to lead the way with innovative real estate solutions and an unwavering commitment to the communities it serves. The new offices in North Bay at 128 McIntyre Street West, Callander at 51 Main Street, and Restoule at 280 Hawthorne Drive will offer a full spectrum of real estate services, including residential, commercial, and recreational property sales. This expansion is designed to meet the growing demand for real estate in these areas, driven by their natural beauty, recreational opportunities, and thriving communities. "We are thrilled to bring RE/MAX Crown's high standards of real estate service to the North Bay area," said Marissa Arnold, broker and owner of RE/MAX Crown. "Our team is eager to help more clients find their dream homes and investment properties in these beautiful areas. We believe our local market knowledge and dedication to client satisfaction will make a significant impact." As the largest real estate brokerage in Northern Ontario, RE/MAX Crown boasts a robust team of over 100 experienced agents. The expansion into the North Bay area will not only enhance the company's market presence, but also provide residents and prospective homeowners with unparalleled real estate services. For years, RE/MAX Crown has been proud to set the standard for real estate excellence in Sudbury, Timmins, Kapuskasing, Hearst, Espanola, Manitoulin Island, and Northern Ontario. The brokerage's commitment to client satisfaction, innovative marketing strategies, and comprehensive market knowledge have solidified its reputation as a trusted leader in the industry. Now, let us turn our attention to a groundbreaking research project that aims to create a culturally appropriate housing model for Indigenous groups. The goal of this recently released research project is to develop a sustainable, affordable, accessible, and culturally appropriate housing model tailored to meet the specific needs of Indigenous women, girls, two-spirit, transgender, and gender-diverse plus individuals. This project is a collaborative effort between the Canada Mortgage and Housing Corporation and the Native Women's Association of Canada. The research project, titled Development of a Sustainable, Affordable, and Culturally Appropriate Housing Model, received $100,000 in funding from the Canada Mortgage and Housing Corporation. Through this initiative, the Native Women's Association of Canada conducted extensive research and worked with architects to design plans for a sustainable, affordable, accessible, and culturally appropriate housing design framework. The project focuses on Indigenous housing and housing for those in greatest need. Carol McBride, president of the Native Women's Association of Canada, explained that the research included conducting a literature review aimed at understanding the challenges faced by Indigenous communities in obtaining, building, and maintaining suitable housing in urban and rural areas, reserves, and remote regions throughout Canada. Additionally, the research involved performing a cross-jurisdictional analysis to evaluate regional housing programs and identify best practices for housing solutions serving Indigenous women, girls, Two-Spirit, transgender, and gender-diverse plus individuals. The group also ran a national online survey to gather insights and suggestions. In collaboration with architects and incorporating key features and metrics identified through the research process, the Native Women's Association of Canada developed a preliminary design for a sustainable, affordable, accessible, and culturally appropriate housing model. McBride highlighted that the current housing model addresses several barriers, including housing affordability, sustainable design, and the use of energy-efficient materials and technology, such as air circulation units and heated flooring. The model also considers maintenance, operation, and cultural elements. One of the key focus areas of the project was to identify the differences among subgroups of Indigenous women, girls, Two-Spirit, transgender, and gender-diverse plus individuals and their housing needs based on geography within Canada, given the vastly different climates, ground conditions, and traditional and cultural housing. The housing design framework includes features such as accommodating the needs of larger families and multi-generational living, windows on all sides and skylights for natural light, a central gathering area, a freestanding round wood stove with a dining table around it, an open kitchen concept, and an exterior attached storage shed. In terms of sustainable features, the housing model incorporates solar panels on the roof, rain collectors, and a greenhouse leading to the rear yard. Accessibility is also a major consideration, with elements such as wider entrances and affordable features like exceeding recommended minimum insulation requirements to reduce heating and cooling costs. McBride emphasized the importance of proximity to nature and addressing high construction costs and limited building seasons. The next step for the Native Women's Association of Canada is to secure funding to develop and test a prototype of this housing model. The proposal is to build the prototype in the Wabanaki territories in New Brunswick. McBride noted, "This phase is crucial for validating the design and making any necessary adjustments based on the real-world feedback and performance of the unit." She also mentioned that community-based research will continue to ensure that the housing model reflects an intersectional and distinction-based approach. The major challenge at this stage is securing capital funding for the construction and testing of the prototype. Efforts are currently underway to obtain funding for the proposal submission. McBride shared that she met with the minister a few months back and is hopeful that early this fall he will take the time to look at the design. "It would be very rewarding if we were able to start getting some funding to realize our plans," she stated. The group is hoping to get the backing of the government for the project. McBride concluded by saying, "Let us get the prototype up to see where this goes. I think it will be very worthwhile. We can evaluate once a prototype is built." This initiative is an important step forward in addressing the housing crisis faced by Indigenous communities in Canada and ensuring that housing solutions are not only sustainable and affordable, but also culturally appropriate. That wraps up today's episode of the Ontario Mortgage and Real Estate Insights podcast. We covered a range of crucial topics, from the Bank of Canada's first interest rate cut in over 4 years to the rapid rebuilding of Canadian real estate inventory, significant losses in Ontario's condo market, RE/MAX Crown's expansion, and the innovative research project aimed at creating culturally appropriate housing for Indigenous groups. Thank you for joining me, Steve Hamoen, and I look forward to bringing you more insights in our next episode. Until then, stay informed and make well-informed decisions. Goodbye.